Welcome to the Investor's Perspective podcast. My name is Gary Pride. I bring over 4.5 decades of experience to this podcast, focusing on business purpose real estate. This content is for informational purposes only. Always check what I've shared either by research or consult with a qualified real estate professional, attorney, tax advisor, financial planner, or other relevant professionals before making any investment decisions. Now, with that out of the way, let's get started today. How to evaluate a hard money investment opportunity. A story of smart investing. Meet Tom. Tom is a retired engineer who spent decades building bridges. Now he's ready to build something else, a portfolio of investments that gives him consistent, passive income. He's heard about hard money lending, where investors like him can fund real estate loans secured by deeds of trust, but he's unsure how to evaluate the opportunity. Tom knows he needs to tread carefully. After all, this is a retirement at nest egg, and he wants every investment to count. Luckily, his journey starts with some advice from a seasoned investor named Jane. Jane shows Tom how to calculate his potential returns. The borrower offers a 10.99 annual interest rate on the $250,000 loan paid monthly for a 6-month loan term. That's approximately $13,738 in interest payments, a strong return for a short-term investment. Jane explains how the monthly payments work. Monthly interest equals loan amount times annual interest rate divided by 12. That is $250,000 times 10.99% divided by 12 equals $29.90 per month. For 6 months, Tom will receive $29.90 a month, totaling $13,738 by the end of the loan term. Hard money loans typically offer higher interest rates than other investments, Jane explains, but don't let the high returns blind you. Make sure the risk is manageable. Next, Jane encourages Tom to evaluate the borrower's exit strategy. Why do they need the loan, and how do they plan to repay it? She asks. The borrower in this case is a real estate flipper who has successfully completed 4 similar projects in the area. He provides Tom with a clear plan. Purchase the property for $300,000. Spend $100,000 on renovations. Sell for $500,000 within 6 months. Always make sure the plan is realistic, Jane advises. Tom checks the local real estate market and sees that similar homes in the area have sold for around $500,000 within weeks of being listed. He feels confident the borrower's timeline and profit projections are achievable. Every investment has risk, Jane warns. Your job is to understand and mitigate them. She helps Tom find potential risks in this deal. The borrower might default. Tom ensures the property value and LTV provide enough equity to cover the loan if a foreclosure is necessary. The market could slow down. Tom reviews the local market trends and sees steady demand for renovated homes in the area. The renovation could go over budget. The borrower has included a contingency fund in their renovation budget, which gives Tom peace of mind. Finally, Jane reminds Tom to understand the legal framework of the deal. The loan is secured by a deed of trust, giving Tom the legal right to foreclose on the property if the borrower doesn't repay. A professional title company ensures the deed is recorded correctly and Tom's investment is protected. Make sure all the paperwork is in order, Jane says. It's your safety net. Tom's first deal. Armed with Jane's advice, Tom decides to move forward. He funds the loan, receives monthly interest payments of $22.90, and 6 months later the borrower sells the property as planned. Tom gets his principal back plus $13,738 in interest, and he's ready for his next deal. The takeaway. Evaluating a hard money investment opportunity isn't just about chasing high returns. It's about balancing risk, return, and security. By focusing on the property's value, the borrower's plan, and your legal protections, you can make informed decisions and build a portfolio of smart, secure investments. So the next time you're presented with a hard money deal, remember Tom's journey. Take the time to do your due diligence, and you will be well on your way to becoming a confident and successful investor. Thank you for watching the Investor's Perspective podcast. Remember, that's just what I think. I'd love to hear what you have to say. Leave your thoughts below in the comments. If you found this information useful or learned something today, don't keep it to yourself. Hit that subscribe button, give us a like, and share it with someone who could use these tips. You could also hit the notifications to be notified anytime I upload another podcast. Remember, this content is for informational purposes. See you next time for more insights and strategies to help you crush your real estate goals.